Welcome back to another episode of Investing Explained. Here's today's question.
Kind of cheating here by answering this one because the futures started this past Monday, actually Sunday night. So it's been active for a couple days now. We're recording this on a Wednesday, so it's been about 3 days since the futures went active. And what we actually saw was the price spiked up and it's plateaued and now it's coming off a little bit. But I think it's still really early to have kind of any idea what kind of impact this is going to have into the long term. Before the futures opened up, I was talking with Pierre Rochard about this, and I told him that, for me, it was a 50-50 split as to whether this was going to make the price pop or make the price go down. I think a lot of people on Wall Street, my personal opinion, having friends on Wall Street, are very skeptical with crypto and Bitcoin in general. So I think a lot of them are anxious to short Bitcoin and to sell it short. But I think that a lot of them aren't stupid either, and they've seen the price go wild for the last year. And I think a lot of people are hesitant to step in front of that freight train. So I think what you might see with this is if you do see the price start to pull back, which I think is a very real possibility at this point because the price movement has been just going wild. And I mean, on a tear. And so I think if Wall Street does see this start to pull back and start getting a little bit of momentum and a pullback, I think you could see the futures market really heavily compound on that and really cause a pretty abrupt pullback, maybe even down to like $5,000 or something like that. But there's no way of really knowing. I mean, that's the thing with futures. I'm curious to hear what Stig thinks.
For some of the listeners, there might be, like we heard futures, but what is it really? So I think before we talk about Bitcoin, perhaps the easiest way to think about a future is to think about a typical commodity. It could be something like oil. So if I'm an oil producer and I plan to produce, 10 barrels of oil in, 6 months time, I can log in that price already. So it's actually a very convenient mechanism for a lot of producers in terms of budgeting and scheduling, knowing that you have that price. And obviously the price could go up, and obviously you'll be paying an opportunity cost for the price going up, but you can also make the counter argument. So it's basically a question about certainty. So what's going on with Bitcoin futures? Well, one thing I would like to add here is that a Bitcoin future is settling cash. So it's not like you actually see when you buy a future with physical delivery for something like oil, you actually own that oil. That's not the case here. So it's all settled in cash. And basically what that means, just to give you an example, is that if you buy one Bitcoin contract, and a contract is composed of 5 Bitcoins. So right now, here's the middle of December, the price is around 16,000. So it will be around $80,000 for one contract. You would have what's called a tick. It's basically just a fancy way of talking about the minimum fluctuation. That would be $5 per Bitcoin. So if you have a tick up, that would be $25. So that means that if you are having the long position in that contract, you'll be gaining $25, and then your counterpart, you'll be losing $25. Probably doesn't come as a surprise that most people are bull. If I look at the future with the expiration date in March, middle of March 18, it's trading up 17,280 right now. It's very interesting to see what happens when the money is in the hands of the bull. If you see a transfer of wealth, if that actually materializes, or as Preston talked about, if you see the opposite, perhaps. I do want to point out again that this is not like an ETF. It's not like an ETF where you will buy that ETF in the S&P 500, and then they will actually go into the market and then buy those 500 securities in the S&P 500. That's not how it works. This is all cash-based, and it's kind of like a separate market. You can now pour a lot more money into the market, but it's not like you would necessarily hold Bitcoin, which would clearly move the market a lot more. For the new futures that you see, I expect almost all of them, if not all of them, to be cash-based, but I would definitely pay a lot of attention if it's not.
The thing that I guess that I find interesting with the futures side is if the derivatives are now stood up, that now opens the door to ETFs, which then adds more and more credibility to all of this. And I think that for the US to step in and the government to step in and shut down exchanges, I think that becomes so much harder the more reinforced all of this becomes with derivatives and ETF type products later on. I'm kind of curious to hear what you think about that, Stig.
I thought a lot about that, Preston, because you're starting to see a lot of regulation. And regulation is something that we typically look at as that is bad, at least for the price of whatever. Like if this is a stock and there's a lot of red tape, it might limit the growth of that company and whatnot. Whenever it comes to something like Bitcoin, I actually see it primarily as a good thing. And if you look at the first regulation that you had about Bitcoin, that was in Japan in 2014 after the exchange Mt. Gox was hacked. The most welcoming country in the world for Bitcoin, that's Japan. Is probably because they're more getting used to it. And also, if you regulate it, you legalize it, you accept it in one shape or form. And I think that's very important. So if you set up futures and perhaps even that link directly to an exchange, you will need to build a system around it. You will need to have something that's public, that's going in and handling it. And that just provides a lot of legitimacy to a lot of investors, not just private investors, but also institutional investors. So what would happen if we see like an entire ban? I mean, because that's definitely a different concern. It's actually very interesting now, currently being in Korea. And one of the reasons why the Korea is one of the biggest markets in the world, and we've seen all this volatility lately in this market specifically, is because China, regulated and said you closed down exchanges a few months ago. And basically, that doesn't mean that people stop buying Bitcoins. It just means that they're going to Korea and Japan. I'm not trying to sell the story that you can't just ban it. It's just with something like Bitcoin, it's just a lot more difficult than for so many other things.
That's impossible. That's impossible to ban it globally. Even if you get the biggest countries in the world and they all ban it together, kind of like the sequencing that you've been seeing with the ECB, the Fed, and the Bank of Japan recently with the way they've been doing monetary policy. I mean, it's totally sequenced. They could maybe come together and say, hey, we got to shut this down because this is getting crazy. But at the end of the day, you still have small countries all around the world that would not ban it and it would be allowed. Now, I think that would be, the price would get punished in the short term, but Bitcoin continues to march along. The protocol continues to operate. I guess for me, I'm looking at it more from like, what happens when this thing hits a market cap of $5 trillion? Does the Fed start interjecting with elected officials to start saying, hey, this thing's evil, and they start spinning it from a political and media standpoint to try to really manipulate the markets and then try to shut down the exchanges? I think all of that is a real possibility, but I think that it's a much harder possibility the longer they wait. And the more that the finance industry wraps itself around all of this, which is what we're seeing right now. I mean, that's my opinion. I would love to hear somebody say something, a good, strong counter argument to that, because I mean, for me, it's a huge risk and it's something that I really want to fully understand. I just haven't really met anyone that I think can really make a strong argument around why that's going to happen. I hear a lot of people say that that's going to happen, but then they have no substance behind the opinion, like there's no substance on why or how they're going to do that after so much is kind of, I don't know. Shoot us some good articles. If people are listening to this and you've got good articles, please send them our way, because we're really curious about that risk. And I think it's a big risk and it's a concern, but I don't have any substance behind it. So we'd like to hear that.
That's it. Preston and I will continue explaining investing, so go ahead and hit that subscribe button.